everybody, Chuck Barone. Tuesday, May the 23rd, 2023. We're getting into some interesting stuff here. The plot thickens this week, guys. You know, I thought it was going to be kind of a quiet week, not a lot of data coming. I was mistaken, because oh boy, there's all kind of fun stuff brewing. So let's get right into it. Before we start the show, as always, I want to welcome everybody to the show. Welcome you guys, and thank you, as always, for your support, for watching the videos and being a part of what we do here. We appreciate you guys. We feel like we're all part of the family. You know, we all want to help each other succeed and do well in this world, and we appreciate what you guys do for us. All right, so let's look at these markets today. So I was joking around yesterday. I was saying how it seems like the trend these days, especially early in the week, Monday and Tuesday, before any real data comes out, that the markets would kind of just go up and down, kind of cancel each other out, and that's basically what they did. Markets up yesterday, down today. They say when the market's in a rally that climbs a wall of worry. It certainly seems like that's where this market's at right now. We're back to the debt ceiling, the scary debt ceiling. And I tell you, if they manage to actually screw that up and have the U.S. default on its debt, a self-inflicted traumatic shotgun blast to the face, you know, we get what we deserve if we do something that stupid. But the market's really concerned about it. I certainly am not. I think that even as ridiculously undisciplined as our politicians are in Washington, as reckless as they are to score political points, even they are not crazy enough to blow up our credit. I don't see that happening. So anyway, markets down today on this rumor. Well, okay. So the bond market has a really weird day because the market's just very uncertain. Short-term rates spike. The 1-month T-bill at 5.88%. Wow, that's pretty juicy. The 2-year just kind of sitting there flat today, 4.32%. The 10-year up 2 basis points, 3.70%. So you can see this inversion is really crazy. 1 month 5.88, 10-year 3.70. What? So bond market just totally crazy. The dollar today up small, but nothing to really talk about. 103.54 on the index, but creeping up, man. 103.54, pretty solid number for the dollar. So holding its own against the rest of the reserve currencies in the world. Gold and silver today, not a great day. Mixed numbers, nothing really much happening. Gold has a small gain, $3.30. $1,975.10 for an ounce of gold. Silver down 21 cents today, $23.42 for an ounce of silver. I think these are still good prices. Market's holding its own, especially in the face of a pretty strong dollar. I think metals are going to go up. I think this is an opportunity to buy metal. I think silver, especially for 23 bucks, looks pretty juicy. You know, it's something most people can afford. Easy, get started. Just be careful paying the fees for it. Don't pay too much. Oil today up small, up though $1.40 per barrel, $73.45 for a barrel of West Texas Intermediate. It's still in that trough. We've been telling you guys it's between 70 and 75 is where it seems to be most comfortable trading. That's kind of where it's been sitting. It's still there until it breaks out one way or the other. A big nothing burger. Bitcoin today up small, up $316, but back up over 27,000. 27,177 for Bitcoin, also looking pretty solid. All right, so let's get to the news stuff today. Not a lot of data to report, but a couple things I want to talk about that you guys need to know. You know, I talked a little bit last week about this looming liquidity crisis. You know, the Fed is taking money out of circulation. If you look at the M2 numbers, at least the numbers they're reporting, you know, M2 is declining pretty dramatically. We know that the Treasury, once this debt ceiling thing is dialed in, is going to be in the market borrowing at breathtaking numbers. The way I understand it, they're going to need to borrow just to satisfy the bills that'll be due and the spending already committed to. We're spending about $1 trillion a quarter, right? They're going to be flat ass busted by the time this debt ceiling thing gets done. They're already into what they call extraordinary measures, right? They're pretty much selling off the silverware. So this liquidity crisis is real. I was reading an article today I wanted to pass along to you guys. I thought it was interesting. This economist was talking about there possibly being restrictions on people withdrawing money from their banks. He was saying that customers are moving money around right now, not only for fear reasons, they're afraid their small regional bank might have a problem, but people are looking for yield now, right? People are moving their money into money markets, moving their money into these high yield savings accounts, which are paying nice yields of 4 or 5% on just a simple savings. So now, and of course, a lot of people now respecting FDIC limits. So if they're anywhere near the limit, they're taking money and moving it around to prepare for any eventualities as far as FDIC insurance. Well, banks are weak that can't handle these big withdrawals. So now the Fed's getting a little nervous about it. This economist was worried that the government might step in and restrict your ability to withdraw your own money from the bank. Now, we've talked about this on the show before, how sometimes, when a lot of you guys have even wrote, we asked you guys to write in about it, a lot of you guys did, saying that if you went to withdraw like any kind of sizable amount of cash from your bank, they literally want to know what the money's for. They're going to ask you, well, what do you need this much cash for? It's really strange. Well, now they're saying that to prevent any type of real capital deposit flight, that they could restrict it. Crazy. And the economist was pointing to what he called, this was interesting phrasing, he called it a waterfall decline in M2, which you kind of see it dropping down. It's down about $1 trillion from its peak, which is pretty big numbers. So this liquidity thing, something we're going to keep an eye on for you guys. I'll let you know what's happening. Most of you guys are prepared for something like this, any kind of weird eventuality. I wouldn't say that this is something to be overly concerned about right this minute. I just thought it was interesting and something you might want to start thinking about, especially if you have a lot of cash concentrated in one or two places or whatever. Maybe finding a way to have a lifeline to some of that cash if you needed it in the event there was some type of restriction. We got all kind of stuff coming to finish this week, starting tomorrow, guys. I think, I laugh. I tell you, this debt ceiling talks and what the market's focusing on right now is the least of our worries, guys. They're going to get that solved. It's not going to solve any of the real problems we're having, though. And this country's just bleeding cash. The government's completely dysfunctional. Our geopolitical stuff around the world is looking just crazy. They're escalating in Ukraine. The war is getting worse, not better. China's doing their thing around the world. And we're fiddling while Rome is burning, man. It's crazy, crazy, crazy times. But anyway, this week we got stuff coming. It's going to be interesting. So tomorrow we'll get Fed minutes, which is going to be, hopefully there'll be something in there that will give us a little bit of an indication of where the Fed is at, as far as what they're planning with immediately as far as rates, but not only immediately, but down the road. Is there really any chance of a cut? We'll get some information there tomorrow. Friday, we're going to get the PCE numbers, which is the Fed's number one way of measuring inflation. They don't like the CPI, right? They prefer this PCE, Personal Consumption Expenditure Index or whatever. So that'll be out Friday. We'll have unemployment numbers we'll get the GDP numbers, which we kind of already expecting, and we know what those are going to be pretty close to. Could get a surprise unemployment. That has been kind of all up and down and all around. It's going to be fascinating, though. This finish of this week is going to be something else. We'll see how it finishes. I think, well, depending on what those Fed minutes say, depending on how hot employment comes in and where the PCE is, we'll get a pretty good indication by the end of this week what's going to happen at the next Fed meeting, if they have breathing room to pause. I think they want to pause because they know the Treasury is going to be in this market big time. They want to give them a little bit of relief from higher rates too. They're the biggest loser in all this. Nobody borrows more money than the U.S. Treasury. So good luck to them paying the higher rates. But here's the thing, guys. If you have been listening, the show, I was talking with Jake, my producer here. June the 16th of last year was our first show. So we're coming up on 1 year of doing this. Wow, it's pretty cool. If you had listened to the advice we've been spouting off all year, my basic, simple, every man kind of advice, well, here's where you'd be right now, pretty close. You would have about 10% of your yearly income put away. So if you have, if you made $75K last year, you'd have about $7,500 put away, plus whatever that $7,500 earned, right? Did you do that? Did you put away $7,500 in the last year? If you did, or more, awesome. If you didn't, this is the kind of stuff that's these simple things we're talking about can do for you, right? If you had listened to us, you not only would have not taken on additional debt, so you would be no new debt layered on, but you'd have actually paid down your existing debt if you have any. So your debt situation, the amount of money you're making every month on payments would be down. You'd be smiling when you get your statements instead of being depressed, because the stuff that we've been telling you guys since we came on the show has done pretty good. We tell you guys 10 to 15% of your portfolio in gold and silver. The rest of it you want to have in preferred stocks. You want to have utilities. You want to have defense. You want to have medical. You want to have consumer non-durables, food and soap, stuff that pays dividends. If you'd have done that, you'd be doing pretty good right now. If you'd have made your 10% on your euro trade like I did, pretty easy to do. Took a little longer than I thought, but we got our 10% out of it. You would have bought everything you wanted in the last year, but you wouldn't have wasted any money doing anything frivolous or impulsive. You'd have been a more thoughtful spender, so you would actually, even with prices rising, likely got more bang for your buck. This is the result of just some very, very simple stuff that we've been recommending and talking about on the show. Anyway, I hope everybody's having a good year so far this year. We're doing better in mortgage. We're starting to breathe a little bit. Anyway, tomorrow starts the parade of data. We'll be here talking about it. We'll see what happens in these Fed minutes, what time they get released, Pacific time, and how much of it I can get into before we do the show. But we'll be back to bring you guys the news you need tomorrow. And I'm sure it's going to be another crazy day, man. Until then, guys, we appreciate your support. See you tomorrow. Take care. Thanks.